Hello YouTube and welcome back to YFP, your final piece in your trading journey. So guys, in today's video, I'll be showing you an insight on how to read M1 order flow and combining this with liquidity inducement. So just before we get into the video, I am trying to hit 100 members in the free Discord. So click that description box, hit the link and it will take you to the Discord. As soon as I reach that goal, guys, I will host a free public webinar going over any chart related questions you may have. Now, let's get into the video, guys. So, are you following order flow correctly, guys? All right. So, or are you just blindly marking out random order blocks on M1 and getting confused which ones to actually choose? Now, if this applies to you, stick around. I'm going to be answering those, obviously, I'm going to give you solutions to those problems that you have. And grab a pen and paper and let's dive into the charts. Now, what you can see here, I've given you like a step-by-step guide on how to follow order flow on M1. Before you do that, you obviously need to have a higher time frame view. So let's start with step one. So we need to find the higher time frame zone where price can react from. So on the M15 now, what we can see here is that price has hunted this previous daily low. Okay, so we've hunted this previous daily low, and we have done that within this supply zone. Okay, now as soon as we've seen that happen, our narrative should automatically shift from the bear side into the bull side. Okay, so we should be framing buys. Now, the next thing that we need to do, step two, is find the next draw upon liquidity for the day. So what that means is we can see that Asia high is untapped here. We haven't liquidated Asia high, so that will be our draw of liquidity that we'll be seeking for today. Therefore, we'll be looking for buys up into that draw of liquidity. Now, step three, what we need to do is wait for price to obviously hit into the demand zone, which it already has here, and start framing buys and wait for order flow to start forming. Okay, now this is where we can go on to M1 now and go back to that region where price has hit into that demand region. So we can see here that price has hit into that demand region, and we've already had a very nice aggressive move out of the demand region. Okay, now by following even the internal structures on M1, we can see that price has a low here to a high to a new low. Okay, so for a structural point from this high, we have actually had a shift in the market. Okay, now this is now stacking our odds in our favor to start framing buys in the obviously in our intended direction. Okay, now what we need to do now is find the demand zone that price is most likely going to tap into. Okay, so the demand zone that price is most likely going to tap into is this. All right, now from here we need to start identifying the liquidity which is in proximity to that zone. Okay, now we've had a inducement here, which is basically like an OB, right? That is there to make smart money enter, stop them out, and hit the true origin of the move. Okay. Now we've obviously had our buy shift there, so that's why we've had that narrative that price is going to buy up. So any of these wicks that you can see here, that price has obviously created, these are your opportunity wicks to start getting into the markets. Okay. Now let's move on. Following M1 order flow again, now we can clearly see we have stacked highs here. No inducements are happening until we see this drop in price. Now from that drop, we can mark this out as our inducement as price is manipulating lows in a bullish environment, delivering bullish order flow. Okay, so we'll mark that out as our inducement. And we need to now anticipate or find the zone that price has induced within, tapped in already. And then obviously this is our liquidation of that. So this is a breakup block now. Okay, so if you haven't seen my previous video, literally the previous video from this one, we went over briefly what a breakup block is, order block is, fair value gap. You should already know this if you're looking at liquidity inducement videos, but this is our breakup block. Okay, so from a high, we have broken internal low to then go up and break a new high. So this is your M1 order block. Now, this is your first tap within that. Any of these wicks that price is now showing you here, these are your entry zones. Now, just because, let's just say you've entered from this sweep and price has given you another sweep, your stop loss should be below this low anyway. Okay, so from this inducement, let's just say you've reacted, you've seen a wick, or you've seen this candle now come up on an M5, you would see a wick, and you've reacted from that rejection wick, from that inducement. You should just have a fixed stop loss of 5 pips. In between 3 to 5 pips, I usually find the sweet spot, especially on EU. 3 pips is just about right. Okay, now that would be your stop loss. Obviously, target wise, it's up to you guys. Now, you already know where the draw of liquidity is. So for me, this would be a target. Okay, so that's the target there. Now, if we were already in this one as well, same concept, guys. We want to be entering from these regions here. So our stop loss would go at 3 to 5 pips. Now, in this case, because it is the low and it is the extreme, I'd probably have a 5 pip stop loss just to give the trade a little bit more breathing space. Okay, so again, this is your 1 to 7, this is your 1 to 9. Now, let's follow order flow again. Right now, let's just delete these structure points before we go on, just to keep the charts clean. Now, what do we see here? Now, following the same thing again. All right, no inducement, no inducement. Oh, hold on. This high followed on to give a what? An inducement, guys. Okay, so this low has been taken out now. We can class this as our inducement. Now, what has price tapped into here? Come on, guys, it's getting repetitive. It's tapped into a breaker, right? It has tapped into a breaker, and you can see that within this zone, okay, so let's go on to a higher time frame quickly, and we'll map out that M5 breaker point. Okay, cool. So the M5 breaker is here. Okay, great. So that buy to sell, that broke internal structure that then delivered a new high, that would be your M5 breaker. Now dropping back down to M1, we can see that price tapped into it, but what did it do? It actually created this build up. Okay, so price created this channel where early orders were coming in, and then as soon as price hit a certain time, it gave a inducement, so a vector, keeping within that POI, taking out that liquidity to continue higher prices. Okay, now this is a model that I teach. It's one of the entry models that I have. I'll post it in the free Discord, so have a check on that as well. And you can see that when you combine this with divergence as well, and you combine it with the indicator that I provided you guys, you will see that there is a opportunity to enter here. Also, again, if you're entering here, you're entering around this region here on the rejection of this candle. Now, again, you have a fixed stop loss. Now, 3.5 pip to 3 pip in this scenario is fine. And your target, again, would be your Asia high. Okay. Now, again, let's break down this. So looking at this on a higher time frame now, you can't really see any structure here. So that's why we have to go on M1. And it's important to be able to read M1's flow of price so that you guys can identify these things happening. Okay. Now, what do we see here? So we have high, no, high, low. Now from here, we actually do see price give a reaction from an internal point, but there's nothing that has actually been hit here. There's no sort of area of interest that has actually been hit that is personally attractive to me. So in terms of the POI in this scenario, we'll be using again this breaker block here. Okay, pulling price along. Now, what we can see within this zone is price made this aggressive channel of price, okay, first of all, and broke out. So it sort of looked like an AMD cycle, the manipulation coming this way. And if sellers were trying to anticipate this here, it would be looking like a nice sell for them to enter. Okay, now what actually happened here was when we drop down to M1, we can see that price from that inducement, so from this aggressive candle, from that manipulation, we can see it was hunted. Okay, so that reaction, all right, so this is the first tap within that breaker zone. Yeah, this would be your obviously your first tap liquidated and the reaction, but it was just one drive. We want to see like a order flow grab. We want to see, no, we want to see a low being grabbed within a zone of demand or supply. Okay. Now, as soon as we can see that, these zones here are your entry opportunities. You can start combining this with your own entry models. So again, if we're following structure, we can see that prices here had a low to a high to a low. Then we've had a new higher low, higher high, higher low, higher high. So on these trades here where price has given you internal, these entries here are perfect. Okay. But this is what I teach in my paid community. Obviously entry models is one of the things that we go over. So if you guys want information on that, hit the Discord link and you'll see all of the information around how to become a paid member. So this is another opportunity that you could have taken, reading M1 order flow from this inducement. Let's mark this as an inducement. This as an inducement as well. Okay. Now again, following price. Okay, what can we see here? Well, we can see that we have structure with no inducements. Okay, so price is just pulling up, pulling up, pulling up, pulling up. Oh, hold on. What's happened from this high? We've actually broken some lows now. Okay, so we have broken these lows, right? We have broken these lows. So this is your inducement. Now we need to find the zone that price would tap into. Okay, so what is the zone that price is going to tap into? So if we go on at M3, we can see we clearly have this down candle before the next rise of price. So that would be our demand. And what happens? Price induces that M1 low into demand, delivering higher prices. Okay, this is all real time, guys. This is it's not made up. Like, you've seen me just give you an outlook on today's price action, you know, and how you could enter these trades based on liquidity inducement and following M1 order flow. Once you can understand how to read a chart, guys, and understand what price is trying to tell you, you're sort of reading a language. There's only so much room for error, you know. But 1, 2, 3, 4, 5 opportunities today based on liquidity inducement approach. That's what you could have caught. Okay. Now, thank you guys for tuning in. I'm grateful for the support. We've generally hit 400 subscribers. So let's keep this momentum going. Smash that subscribe button and stay tuned for more content like this. Obviously, join the Discord too, guys, as you'll be able to request YouTube videos you guys want to see. And I'll literally try my best to create them for you. So take care, everyone, and I'll catch you in the next one. Peace.